Good morning, good morning. How's everybody doing? Happy Monday. Hey Raj. Hey Cisco. Aloha. How you guys doing? Hey oh, how you doing? Good, good. Welcome everyone. Welcome, welcome. Welcome to the Trading Syndicate for Monday, the 13th of October. How's everybody doing? So before I start, I gotta let you guys know there's gonna be a bit of a change this week. They are taking me off the public YouTube stream. So, for those who are interested in the tradingsyndicate.org, Steve's trying something new. If you guys want to sign up to keep receiving these streams, I'll be back here and there, but it won't be for this week. The streams are just going to be for the people in the room, like they used to be. So, join us at the tradingsyndicate.org. It's $19 US. So it won't kill you if you're still interested. Hopefully, we'll see you there. We'll be doing two streams today, and then tomorrow, um, we'll be off. So I don't know how long that's gonna last. We're gonna give it a shot. See if we can. And I'll be perfectly honest. It's to drive and try and get some membership up in the room. So let's get to work. Hey, Jiraj. Hey, Cisco. What's going on, Jerry? How you doing? So we have Dennis the Menace messed with the markets on Friday, and then Sunday night he went, just kidding. So currently, unfortunately, we've got a ton of people trapped short underneath 66.26 who probably shorted the bejesus out of this thing on Friday going into the close, and they're trapped there because that's where the bid is. The overnight low can't break 66.26. That's where the shorts are really bid to cover. You've got a short covering P profile today. And it's good for the wholesalers who got just labeled with inventory from 26 all the way down to, we got all the way down. We did a look below and fail of 65.47 half. Difficult trading on Friday. I got lots of messages on people who blew up their accounts when I told them to stay out. But, you know, that's how some people learn. What are you going to do? Hey, Lara, how you doing? Thanks, Dan. So we are the good news, if there can be good news, is the U.S. markets are operating perfectly well, right? We have, nice trading this evening in the market. Um, you know, it was a good flush. right? It was a good flush of inventory, right? And let me just say this: if we can't get back under 66.26, don't be a putz and short this thing, okay? Um, shorting the market, it looks great, on Friday if you would, and everyone's like, well, if I had sold 6,800 and bought it back at 65, I could retire. Well, that's not trading, and that's completely, I don't know, it's completely unrealistic. And someone who's worked in the industry for 33 years will tell you that, that just doesn't happen. you know, so we've reset, short-term inventory back to September, right? That's all we've done. I'm going to show you a 4-hour chart, and just to show you how these things work. So I drew a 4-hour chart, and you can see with the volume profile, you could see the cost basis was here. In August, September, we took it up and we sold it. Then we put it on sale. And if you look, we came right to the middle of the cost basis, pretty much to the tick. Friday's low was 65.40 and a quarter. Our level is 65.40. So, you got people on there calling for the end of the world. And folks, if I can leave you with one thing before I leave this planet, don't listen to the news. Listen to the chart, okay? Anybody who trades the news is probably caught short really badly. And right now we've done a look below and fail of 66.60. We've done a look below and fail of 65.64 where it went all the way up to 66.60. We are up close to 100 points in Globex, right? And here's where you're going to see resistance, okay? This, what you guys call a high volume lymph node, right here. That's why we're kind of stalled out here, because there's position here. The next place you're going to see a little bit of resistance is above 67.10. And then up here, that's where you have all that inventory that was clogged up from 67.57 to 68.05. Now, most of that got puked out, right? Most people, even large accounts, right? Even large accounts are not going to take the pain of having a 240 point drop in a market, right? They're really unwilling to do that. So there was a ton of liquidation on Friday, right? And we went right back to cost basis, right? So if you understand how markets work, you're good. If you don't, you're still missing things. Cost basis is how much you pay for your accumulated goods before you take them and sell them for a profit. That's why you get these nice look below and fail trades on trend up. Now we've broken trend and liquidated. But what do we do now? Let's use these levels, right? And I've put these levels in the room. In fact, yesterday I put 3 videos in the room on pre-trade trade preparation, how to distinguish 2 different types of liquidations, and also how to look for breakout trades, right? They are 3 very, very detailed videos. There's also in the JJ commentary section, folks, you guys need to go and read that stuff because from what I see that's written in the room, please go and read that stuff and educate yourself. I really, really, really cannot stress it enough that you guys need to learn just the basics, and that will really help you when you're trading. You also need to learn how to look at a market, and you need to learn how to observe a market without that crackhead, I need to take a trade thing, right? You need to learn how to observe markets to see where you should be doing business and how you should be managing risk, right? Also, you need to learn how to trade quick. so you can get out of bad situations fast. It's not I want you doing 200 trades a day and scalping. It's that you should be able to make decisions quickly and train yourself to react when things change. If you can train yourself how to react, you actually have a fighting chance, right? Otherwise, when trades come along, you're flailing around, right? And you have no idea what's going on. It's difficult, right? So you have to train yourself. Focus, discipline, preparation, all of that boring stuff, that's what makes you money. That's the magic in this market. So this zone is a big zone. We have 65.47 on the bottom and 67.85 on the top. Usually it takes at least a week to get from top to bottom, bottom to top. We're doing it in a day now. And what I need to remind you guys of, right? Don't forget that we had a 500-point day back in April. You guys remember that? Do you guys remember the 500-point day? Yes, no. So having a 200-point day, that's kind of normal now, right? So you can't get all, you know, you can't get all scared when you have a big liquidation, right? You have to be smart, right? When you have big liquidations and if you don't have the skill to trade a big liquidation, don't worry about it because that liquidation is going to bring up such good trades this week because we've got a nice liquidation. Now we've got another short position underneath that, you know, definitely underneath 6,600, right? It's going to hold the market up, and we're going to get some nice back and forth trading. If you look at the daily chart on this thing, right, you can see that we liquidated right back to a cost basis, right? Right where we went back and forth, and then right back out of it. That is not end of the world selling. That's this guy saying something stupid on Twitter. The markets and the algos overreacting. These are thin markets. So now because of electronic execution, right, in the old days, it would take time to pull orders. So the market would go down, get stuck, and it would stay stuck for a little bit, and then buying would come in. Now what happens is there is no price stability because the order books are so thin that the markets just keep liquidating and liquidating, and the algos just keep pulling the bids and offer lower. So it'll offer and bid, and then it'll offer lower and bid, offer lower and bid, and that just is like a snowball effect where it just boom, right? But the sell-off was very orderly. It wasn't panicked, right? If you go back and replay that sell-off, it wasn't a panic sell-off. And now we're sort of right back, right? So that's a big inventory correction, and that should set up some nice back and forth trading this week, right? So my balance zone is 76 to 82. Double it to 94 on the top, 64 on the bottom. And let me just go and set VWAP. Hey Alexander, how you doing? So VWAP's down at 66, 69. Total distribution over VWAP. Right? We do have a poor high. Right? We got a double top. J period corrected inventory down. That's good to see. Just had a nice little look below and fail of 76 up to 82. Now let's see if we can get past those sellers that have been plaguing us right here in that 84 area. If we take out this 66.85, what you're going to look for is 66.92 and a half, which is just around here. That's where that G high is, right? Another interesting thing is if you look at the overnight low, which is right where the open is, you'll see it matches the M period high to the tick. Small little detail, but it means a lot. Look at where the point of control from Friday is. Right? Look at that point of control. Right? So you know that in this area there's a lot of short volume as well as short covering. But look at that O period spike. The close is all the way down at 66.52 or 65.52. Previous day low, Friday low is 65.40 quarter. That O period spike never had a chance. And the fact that we opened at the M period high, that's telling you something, folks. That's telling you that there's some pretty trapped shorts. Let's see if we can do. Okay, we just did a look above and fail of 66.82. So we'll be targeting 76 on the bottom. And let's see, where's the trade? Where's the trade? Oh. Oh, cool. Stretched catcher's mitt? Yeah, Raj. It's a little bit, isn't it? See, the thing is, on Friday, I was very quiet because people were like, oh my God, it's the end of the world. We're going to do this bear market. I'm like, have you guys been around? Remember that. Now, I want you to check, right? I want you to go and look at the trading volume of Apple on Friday. Anyone? Anyone up for that? Apple traded 61 million shares, 61.7 million shares on Friday. It's down $8. Is that panic selling? Did Apple all of a sudden kind of come out and said, oh my God, we're not making electronics anymore. We're going to make cotton balls. Right? No one's sold. Right? It's an inventory correction. When you see 300 million shares, 400 million shares of Apple trade in a day, then you get nervous. Okay? It's got 16 billion shares in the float. We're trading less than 1% of the float. There's no panic selling. The ES is a speculative instrument which is run completely by large money speculators right now. So that's why we have these huge ranges, and that's why, because we have thin markets due to electronic trading and very fast order interaction and people putting in orders and pulling them and things like that. That happens in microseconds, milliseconds, whatever is smaller, right? In the old days, it would take minutes to change an order. Now it takes, you can, in the time it took in the 90s to put an order in, you can probably pull off 300 trades now, right? Right? These markets are rigged to go higher. Because guess what? That's how everybody gets paid. Right? You have a $1 trillion industry where everyone is getting paid for assets under management. So the assets, if they get marked up every month, every year, everybody gets paid more. Now, you guys have all seen Wall Street movies. Do you think guys in my industry are there for the Mother Teresa Award? It's not a charity, right? So they do everything that serves them. It's a self-serving business, right? They're like, "Oh, I don't want a bonus this year. I'm going to donate it to the poor." No, they've already spent their bonus. on the new Aston Martin, on the new boat, on the new Bayliner, on the new whatever, right? On the new Riva, right? They've already spent that 15, 20, $30 million bonus. It's gone. So they're going to do everything they can to make sure that it happens. Now we're back above the sellers. Let's see if we break that overnight high, right? This whole thing is rigged to keep going higher and higher and higher. And the sooner you realize that, until there's a massive material change in these markets, people who short and short and short and short, they just keep helping push price up. I mean, you're short under 6,600. How are you doing? Offside 84 points. You're not doing well. You're not doing well. Let's see if we can take out that poor high. Now, breakout traders. How do you manage this breakout? Okay, say you want to ride the breakout from 84 up to 92, right? This is how you're going to do it, right? Once it clears 84, right, you're going to go long. But when you go long, you got a seller up here at 85, right? I would probably wait until we cleared 85 to go long. Because until you do, right, you got this choppy crap here where you can go breakout, failed breakout, breakout, failed breakout, right? Let these guys clean it out and go long above 85. Use 84 as your warning and maybe 83, 82 as your stop. Your first sell will be 88, right? And then up higher. Now let's see what happens. London's going to open in 7 minutes, right? That's how you want to manage a breakout trade, because a lot of breakout trades get sold into. I know if I was long at 82 and it breaks 85, 86, I'm gonna hit you in the face with some contracts, right? I'll be fanning them out. Now, if a bunch of suckers come in about 86, I'll lift my offer to 87 and see if they follow like good little obedient price chasers, right? Right? The algos are trained or self-trained or whatever, how they do it, to raise price when they see buyers. Because that's what human beings used to do in the old days, right? Now that process happens much faster. So now we're creeping over 84. It's a creepy, creepy, slow price action. If you're already long on the look below and fail of 82, say you're long 83. Put if you're long 83, 80, and you're long say 5 contracts, put a sell order out at 85 and a quarter. Okay? Or even 85. Sacrifice one of your contracts to be a lookout offer. Because here's the thing, if you're not going to get filled at 85, nobody's going to pay 86. You guys understand what I'm saying? When you're a trader, you use your orders to let you know how well your business plan is executing. Do you guys understand that? So as soon as you're long, put sell orders out. Number one, it gets them in that FIFO CME order matching engine where first in, first out, right? Get in line early, right? The other thing is, if you've got an 85 sell order and you see how it's printing 84 and 3/4, but it can't take the 85s? Everybody see that? It's clear as the nose on your face. Look at the top of the last two 1-minute candles. They can't trade at 85. If that's the case, you got to sell her. So if you're long 82, 83, right? You better like be awake, right? Don't fall asleep at the switch, right? They're front running the overnight high, right? Look, they sold here in C period and in J period. That's hours apart. The same seller is still there. Size. If there wasn't a size seller there, we'd be up at 89 already. Right? Now, we might break through that when London opens if we get a burst of order flow. Let's see. Right? So the videos I did this weekend, I put them in the JJ commentary section. Please look at them and try and watch them. So we got a triple top now. Let's see if we can take out that. So now if you had an 85 sell order, has it executed? Or are you still unexecuted? Do you know what I'm saying? So if you had a 85 sell order in there and it did not get executed, that means that there is size ahead. Any stock traders here? Anybody still awake? There we go. There's the break. Looking for 88. Close. Now let's see if they backfill or do we get some follow through, right? So when the next candle opens in 28 seconds, let's see if we get some follow through. No kidding, eh, Dan? Well, it's Monday. People are still asleep. Stock traders, have you ever heard the saying? Probably not, because you guys probably have never traded on the phone. Are you familiar with the saying stock ahead? That's when you go to put in a sell order and your broker or your trader tells you you're not going to get that price. There's stock ahead of you. Right? You're going to have to sell it cheaper. Right? That happens even now in electronic trading. There is stock ahead or product ahead of you. We're holding. See how we came back down on that green candle down to 85? So the resistance area has now become the bid because the position's underneath it. As long as we stay over 85, your long's looking good. Now it's a slow, creepy long, right? So you better have your sell orders out just in case. Now London's going to open in a minute and 20 seconds, and that should bring some short covering because we can't seem to get lower than 86 right now. Watch the chart. The other thing is replay this, right? If you want to be a good breakout trader, replay your charts after your trading session. Go and replay the charts after the breakout and see. It's a holiday in the U.S. That's right. It's Columbus Day, right? I forgot. Go replay your charts. You see those three candles? 1 minute candles. The seller is at the same place. So while it is breaking out, it's doing so very, very slowly, right? And this is the problem for this market with electronic execution. Trading breakouts is a pain in the butt. That's why I don't trade breakouts. If I was long 82, I'd be banging them out with both hands here at 86. I'd be selling everything I got, right? Just because that's what I'm trained to sell into strength. You guys are trained to buy breakouts, right? Here comes London. Now we got a poor high, right? One tick excess, double top. Now if London can't get down to 85, it's going to turn There we go. See? There we go. But what I'm trying to do is I'm trying to teach people how to intelligently trade a breakout, right? Knowing full well that they're a pain in the butt to trade because we don't have humans anymore trading. So the emotion is out of it. Breakouts are an emotional thing, and that's why you get follow through, right? It's just like in the old days when you had a brand new high in the Dow, everybody would come in and buy. That doesn't happen anymore. People are smarter, right? They're more shrewd. Make sure you have your sell orders in. Here we go. Now you're selling, right? Now you're making sales. There, your breakout's working. Do you guys see how it works? I'm going to make a video about this later, right? Rewind this part of the chart. It's beautiful. So if you were long 85, you're selling some at 88, you're selling some at 90, you're done, right? 3 to 5 points on 5 to 8 contracts. Thank you, right? Now it can do whatever the heck you want. You've made your money. Let everybody else fight over the scraps, right? See? They're selling into it. Nice work, Lenny. Beautifully done. That's what I like to hear, right? Now, let's see if we bid 86. I mean 85, sorry. 66.85. Shorts are trapped under 85. Let's see how strong they're short. Right? One tick underneath. Does that bring in buying? A little bit. Not too hot and heavy. If we get under 85, look for 82 and a quarter. I'm expecting a little bit of selling because, well, there's a whole month of inventory above us. Oh, there we go. Right down, right back down. Oh no, it's okay, Dan. What I do is I scale out. So if I was long 5 to 8 lots, right, at 85, 86, if it breaks 84, I'll cut the trade in half. Now, the other thing is, when you're trading that kind of size, you have to be able to afford that business loss, right? Because that is a business expense. You are going to be wrong in trading. So you have to manage your expenses. So what I do is if I'm long 85, 85 and a half, and it takes out 84, I'm starting to, that's like my warning level. It's like altitude, altitude, warning, warning, right? Start cutting contracts, right? And because that overnight high is where the support should be, if the shorts aren't bid there, I'm hooped, right? I'm gone. So my risk is very, very tight, right? If it accepts under 84, I'm gone, right? Because I know you can see the selling step in, right? And this is why breakout trades, I find them to be contentious because I'm the seller in a breakout trade, just like, I'd be selling it from 88 down to 82, right? Instead of being the buyer, right? Because I've been trained to be a liquidator. I've not been trained to be a retail buyer, right? So you think like, you know, I don't stand in line to buy an iPhone. I look at what kind of marketing that you used to get people to stand in line to buy something, So I look at the world very differently than a retail person. Retail person, they see the ad, they go, "Ooh, that's really hot," right? And they'll go camp out and stand in line to buy something. I always want to be the seller. Like when I go into a casino, I go, "Man, I wish I was the house." I don't want to gamble in a casino and give them my money. I would rather take the money. You see what I mean? So I look at things completely differently. That's why I don't buy breakouts. But if you're going to buy breakouts, you got to be quick, right? You could have bought 85 and sold 88. And as soon as it started to come back down and it didn't take your sell order, say you had 92 offers, right? It didn't get up there. Get out. Be fast. You got to be fast. You can't be like do 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 do, right? When you're trying to trade a breakout. You got to be in on it. You got to be tuned in, right? You got to be really tapped in, right? That's why a lot of the times if I'm kind of like slow mentally, look below and fail of 82. Sorry, folks. We're looking for 88. Now maybe we can get higher, right? See the rotation? That's the trade I prefer. Sorry, I was flapping my gums, right? So that's the trade I prefer because you've already cleaned out those sellers. You look below and fail 82. You buy a little bit before between 83 and 84. Use 82 as your stop, and boom, you let them have it at 86, 87. Thanks for coming out. See? That is a wholesaler's trade. Buying a breakout is a retailer's trade. Get it? You have liquidating inventory into wholesale hands being sold back into the retail flow for profit. That's the trade I like. Instead of buying it here and hoping it does this, I like this. Because the market goes underneath my level, sell orders are complete, I can buy a little inventory and let them have it up here. Do you guys get it? Do you see the difference between the two trades? Maybe? Okay, maybe after a few more coffees. Here we go. Going begging for 92 and a half. Good, good, good. Good, good, good. Okay. Oh, my work is done. Oh. How's the coin of bitterness? 115,339. Good, good. So I am going to. I'm going to put this in because tomorrow we are going to. You'll have to be in the room to see the stream. Just want to remind you guys. Any questions? So does that help, Dan? That's why I like the look below and fail trade, because you flush all those sellers out. The path is a little clearer, and your risk, right? So what would you what would you like to go over? Jiraj, look below, fail. Long, stop, sell, 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 sell. Yeah, this crash was just a real basic look below and fail of 65.47. So Jiraj, this is a classic look below and fail. So after the session, what you want to do is you want to rewind that. Yeah, so we took that stop, right? What was that, 92 half? And it's still distribution. Where are we going to see some serious resistance? I'd say it's 67.05. That's where these huge set of single prints are. From 67.05 to 42. That is a massive chunk of supply that's above our heads, right? So look for some resistance there, right? Now we just look for the seller, right? They're going to backfill this, and in 17 minutes there's going to be another period that opens, and the bid should be underneath 88. Oh yeah, it's definitely going to be an inside day, Raj. Sure. Okay, David. Good question. Beautiful question. Okay. So what happens is when the market came down, and you see right here where D period took the low of C, anyone who's long above that got trapped and started puking, right? So that creates an excess of supply, right? You got an excess of supply between 67.42 all the way down to 67.05. So now this will be weird, okay? This will be if aliens land. If the market gets to 67.05 this morning, okay, and it starts going into this red box, think of this as a storeroom for contracts. So if it runs out of supply, it's going to go over 67.05 to get that supply. But there should be a seller up here, right? If there isn't a seller, it's going to be freaky deaky. And the cool thing is we actually got some time. Let's see. What happened to my clock? So remember, right? Backfilling is an inventory correction, Jiraj. Think about when you run the store with your dad, right? It's the same thing. Backfilling is an inventory correction. It's a type of inventory correction, right? It's inventory correction on purpose to bring in more buyers, right? Tease them with lower prices, right? You tell them that stereo is on sale, or you know, oh, this phone's on sale, and then they get into the store, it's really not on sale, but they'll sell you something else that's more expensive because we're out of stock. You know what I mean, right? Think commerce. Always think commerce, okay? Think like you're in a store, you're running the store, not that you're a buyer in the store. We want to switch your mentality from someone who chases price and buys to someone who sets price and sells depending on the amount of customers coming in. That's what a market maker, a wholesaler, any kind of a large trader, their job is to set the sales price depending on the order flow, which is just a fancy way of saying people coming in the store. That's all order flow means. Right? That's why I laugh when people say you're an order flow trader. I'm like, yeah, so are you. You just don't know it. Right? Everyone's an order flow trader, right? Order flow is what makes the market go up and down, right? Customers come in, you can raise price. Customers leave the store, you chase them out the door and lower price to give them a better deal, right? There you go, right? It's simple. So always think about that when you look at a chart. Right now, the suckers are coming in. So let's raise price. Let's see if we can soak them at higher price, right? It's 3 o'clock in the morning in New York. Do you think these are like long-term buyers? No, these are short. This is short covering. Right now, David, we are going to get single prints to the upside when the next period opens. So we're going to have a short position after a massive liquidation. Right? Right? Now we're going to have a short position that starts here because everyone who was shorting this thing was using that high of what period is that? K period? Yeah. They're using that K period high as your stop, right? And before that they were using the C period high, right? Jerry, now I'm really confused. So when we enter the single print area and start to print price there, do we still consider it single print since it's not the same session, or we can't say that it's a single print anymore at the prices where the prices have been printing? Brother, now I, I zigged when I should have zagged with that question. I'm sorry, I don't understand what you're saying. I could tell you that if we get up here and it's not RTH, old traders say it's not filled. But if we open in RTH above the single print, the supply's been soaked up. Just think about it as just, maybe try and ask the question another way. I'll try and, because I just got confused. Okay. You took me on the merry-go-round on that one, my friend. Hey, I've only had one cup of coffee. Now let's see if we could get back under 94. Now we're backfilling. Jirash, look alive. Wake up. Wake up. Right? We're backfilling. Right? This is an inventory correction, right? Right? See, look. When we got to 94, what happened? The offer lifted. Watch. Right? Make this really big and just watch this. Right? Don't worry about trading it. Just watch. So that red candle came and we went underneath 94 and right back up. That, my friend, is a look below and fail. I was thinking that we were going to correct inventory, but look, we couldn't get underneath here. Look below, fail. Small candles, not much follow through. I wouldn't take the trade, right? Because we know that right now we got sellers here. So what are we going to do? Do the same thing. If you're a breakout trader, Let them clear the 96s and you can go long 96, 97, and then your margin of error on that trade is here. Because it could go back and forth and now it could come all the way back. You don't know what it's going to do, right? Now it's a look above and fail. So it switches. When it's like that, just stay away from it, right? You want to take the trades that are obvious, right? You want to take the trades that are obvious, which means sometimes you're not going to be trading every single second of the day, right? Now, if you're looking for a short, right, and if you're a gun to the head short seller, right, wait for the next candle to open and see if that next candle opens under 94. That's going to be a clue that the offer is moving lower. If the next candle opens above 94, maybe the short isn't the best idea because they're going back and forth cleaning out the 94 level. Why is that happening? Because it's the top of double cost basis. So now do you understand that you bought your stuff under 82 down to, what is it, 78, and now you are at double cost basis. So there is going to be a little bit of back and forth here, and maybe the buyers will come in, right? So you went from a look below and fail to a look above and fail to a look below and fail, and that's how you get stopped out 3 times doing 3 different trades. Just let the large traders work this out, right? Let the big dogs eat. When they're done, there'll be plenty of eating for you. Wait till we get over 96, 97, and then you can buy that if you have to buy a breakout at the top of a range, right? If you're a gun to your head breakout trader, then you can do that, and your margin of error is that bar, the top here to there. So if you're buying 97 and it gets under 96, wake up, right? Be ready to get out. And if it takes out 95, right, then you don't have to wait for an engraved invitation to get out of a bad trade. You see what I mean? So here we go, right? So say you're buying 97, right? Take the offer. Boom, right? Right? And remember, there's a nice round number coming up at 6,700. So maybe you want to sell 99 and 3/4. Don't play with the QR code. Exactly, David. Exactly. Right? So say you're long. You're buying 97, 97 and 3/4, 98. You're buying position here. Well, put your offers out. Get your offers out. Let's see if we can get rid of one at 99 and a quarter. Yep, there's 97 and 3/4. Right? There's a seller at 97 and 3/4. At the top of a market, if you have to buy a breakout, make sure you sell into strength. Don't be sitting around sucking your thumb hoping for higher price. Get rid of your inventory. Okay? So say you're long 97 and change, 98, sell into this. Take that profit, right? And you're out. Right? There you go. Trading breakouts. Does that help? Dissect the breakout. Don't just close your eyes and buy it. Dissect the trade, right? Tear it apart. Never be afraid to tear a market apart, ladies and gentlemen. Hopefully this helps. Creep it up on 67.05. Now let's see if we see sellers up here. Right? We're expecting sellers at 5.75. So where do they start front running? Do they start front running? But if those sellers see a bunch of suckers lining up to buy, they'll lift their offer. They will raise price. The sellers set the price in a market. This is what everybody doesn't know, and this is what they forget. The sellers set the price in the market. They set the price according to the buyers coming in. So if there's a lot of buyers coming in, they'll raise price. Right? If there are no buyers coming in, they will lower price to get rid of their dun 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 inventory. Right? It's all inventory, my friends. Inventory has a cost basis, right? Good idea, Raj. Good idea, my friend. Rewatch the session, rewatch those videos I put out, and then start rewinding your charts. Now, I know down in, you're not in Telford, you're in, where are you? You're close to Telford, aren't you? Wolverhampton, that's right. Now, I know in Wolverhampton, you know, things are a little different. And the name Lawrence Taylor and those kind of people, you have to rewind your plays. It's like chart replay is the same as watching game film in football. And I'm talking real football. I'm going to get into trouble for this, right? Right? You got to channel your inner Mike Singletary. You watch your game film, you're educated, and when you're trading, you got your eyes wide open, right? Wide open. And if you don't know who Mike Singletary is, go Google him. And we're creeping up on 5.75. Let's see. Can we get there before the next minute candle opens? Here we go. It's a race. Yes, Raj. No snooker. I think we'll just start calling you Higgins, Raj. Darts last night. I can't believe you watch people playing darts. That's crazy, man. I can't believe they put that on TV. I'm going to get in so much trouble now. Oh. All right, folks. So now we got a big short position. We got a short position underneath trapped longs. How weird. Now, normally I will expect this green box to fill. right? Under normal market conditions, we should have some selling here, right? So watch this area. Be careful. Use stops tonight. It's going to be a little wonky in RTH. We'll get you through it. Thank you, everyone. Have a wonderful morning. Remember, today, the 2 sessions are going to be on YouTube today. Tomorrow, if you want to join in, you're going to have to join the room, thetradingsyndicate.org or just tradingsyndicate.org. It's $20 a month. Give us a try. And I will see you later on this afternoon at 9 a.m. Eastern Time. Thank you so much. Have a wonderful, wonderful trading day. Stay out of trouble out there. Bye for now.